Hi, I'm Tony Dunn from ETF Portfolio Blueprint, and I have a question here for you. What would you say if I said copper was the most important metal for our future? Now, I know investors love to talk about gold and silver, but if you actually want to discuss the metal building the infrastructure that will help shape and power our world, it's copper. And right now, the world can't really mine it fast enough. From AI data centers to electric vehicles to power grids, copper sits underneath nearly every major investment theme shaping the global economy and probably your house right now. And unlike many past cycles, right now we're seeing demand accelerating just as supply is getting harder, slower, and more expensive to bring online. Copper demand is accelerating faster than supply can keep up, and from what we see, the entire sector is heading towards a structural imbalance. That makes it an interesting investment opportunity worth considering. But first, let's dive deeper into the story behind copper as an investment. Now today, copper isn't just a construction metal anymore. Sure, it's in the pipes in your plumbing, but more importantly, it's the backbone of electrification. For instance, EVs use 2.5 times to 4 times as much copper as an internal combustion car. Renewable energy systems use significantly more than traditional gas and oil generation. And now we're adding an AI. Modern data centers are among the most power-hungry assets ever built. Every incremental upgrade to generation, transmission, and storage runs through copper. As the economy electrifies and digitizes, copper demand compounds. And this is where copper's story shifts from just being cyclical to structural. We're seeing that electrification isn't optional anymore, it's becoming policy-driven. The US, Europe, and China all have multi-year mandates for energy security and emission reduction. As a result, copper has become a bottleneck commodity. Some analysts even see copper demand rising 24% over the next decade, but supply is barely growing. Why? We're seeing major production disruptions, long lead times for projects, and declining ore grades as some of the reasons behind this supply and demand imbalance. According to S&P Global, the largest recorded copper deficit stands at just below 1 million metric tons in 2014, but could exceed that by 2035 in either their optimistic or their pessimistic scenarios. Emerging markets add another layer of pressure to the copper story. You look at countries like India and Vietnam. Both of these are urbanizing rapidly. As a result, the power grid and its demand is being reshaped along with the manufacturing supply chain. This entire process is extremely copper intensive. We see that even a modest increase in per capita electricity use or EV adoption in urban areas translates into meaningful yet incremental copper demand. Now when you zoom out to Southeast Asia, Latin America, and even parts of Africa, it's clear why emerging markets are expected to drive much of the next phase of copper consumption. There's also a geopolitical angle to copper. Did you know that copper is now classified as a critical mineral by the United States? This recent shift reflects a very new reality. Governments, the US and beyond, are realizing that electrification, grid expansion, and energy security all have a common weak point: whether or not you have access to copper. And unlike some commodities, copper supply isn't spread around the world in a uniform manner. It's heavily concentrated in a few regions. Chile, Peru, Russia, China, and the DRC dominate global copper production. But unfortunately, where these countries are makes the supply chain vulnerable to political shifts, trade tensions, and potential conflicts, and also delays. This is exactly why the US, EU, and other Western allies are now treating copper as a strategic asset. This means diversifying supply chains, reducing demand on single country producers, and securing long-term access because in all these countries, electrification goals are accelerating. And this is why geopolitics is becoming part of the copper investment story. All of this feeds into the central investment case for copper. The narrative for copper has a real, measurable demand story, and on the other side, a structural supply deficit. And that's the heart of the investment case, not just for the metal itself, but for the companies that are extracting the metal. Copper miners, these have high operating leverage. Their cost bases are large and fixed, and when copper prices rise, we see revenues increase faster than expenses. That's why during these sustained copper supercycles, miners can meaningfully outperform the metal itself. For investors, this is where copper shifts from just a macro narrative and a mineral into an equity opportunity. So once you understand the supply imbalance and how much operating leverage copper miners have, the next question most investors have is, well, how do I get exposure? So this is where picking individual copper companies can be difficult. Many of the so-called pure play miners, that is those that are focused mostly on copper and not other base metals or precious metals, operate in politically sensitive regions or they may trade on an exchange that isn't easily accessible to you as a Canadian. And even if you are able to invest in these companies, you're taking on a lot of idiosyncratic risks, that is to say, company-specific. For instance, if you're a copper mining company, permitting delays, cost overruns, labor disruptions from a strike, or single asset dependence can make or break your business model. Even though the broader copper thesis is running, your individual investment might not. For this reason is why some investors like looking at a more diversified approach, something like the Global X Copper Producers Index ETF, or COPP, or it's a basket of global copper miners, including names you may not be able to buy directly as an individual investor. Now, the idea behind such an ETF isn't to pick the individual winners in the copper cycle. You're trying to get clean, diversified exposure to the overall structural trend of copper demand and a supply imbalance without having to bet on a single management team or a single project coming to fruition. Now, the issue with copper miners is that there's not a lot of income generation from these. A lot of the miners need their excess free cash flow to reinvest back in new projects or to have a buffer during a down cycle. But if you want copper, there's the Global X Copper Producer Equity Covered Call ETF, or CPCC. It's the world's first ETF to combine exposure to copper production companies with a covered call strategy. And the logic behind here is such. Copper itself is a volatile metal, and copper miners are just as volatile, if not more. But that volatility is precisely why it can be attractive for covered call strategies. A covered call strategy like CPCC harnesses that volatility to generate options premium income, while still maintaining some upside to the long-term copper theme. You still get a basket of stocks roughly equal to COPP. This particular approach may make sense for investors that are either looking to achieve a bit more income in their copper exposure or looking for a bit of downside protection because the premium can cushion some losses. The income from the premium can thus help smooth pullbacks in copper producers. But it is worth noting that this approach does come with some trade-offs. For instance, covered call writing can limit the potential upside of the underlying basket of copper securities. Overall, the long-term trends of AI demand and national security priorities could support an investment case for this critical mineral, while also offering potential income opportunities where appropriate. At the end of the day, copper sits at a very interesting intersection. You have drivers from electrification, emerging market growth, and also geopolitical tensions. We've noted that demand is accelerating, supply isn't keeping up, and there's a lot of investments in projects needed to close that gap, but those will take more than a decade to bring online. This is precisely why the market keeps coming back to copper whenever the conversation turns to long-term infrastructure and energy transition. For investors, the key to unlocking the copper investment story is finding a way to participate without taking unnecessary risks. So whether you approach it through individual copper mining companies or through a diversified basket represented by an ETF, the story is the same. Copper's role in the economy is expanding, but the market is still trying to catch up and price it in. Understanding that imbalance and understanding how miners translate it into cash flow is what makes copper a sector worth watching over the next decade. Thanks for watching. I'm Tony from ETF Portfolio Blueprint, and I'll see you soon.